these on-again, off-again headlines out of China, the market is, I don't want to say used to them, because obviously we saw the futures just turn down, but they've been going back and forth now for the better part of a year and a half. You believe the markets can hold up here in the face of that unless Trump follows through with these big European tariffs?
Yeah, it's because that's something that the markets really aren't pricing in right now. And it's also, of course, that we worry about the December 15th tariffs with China and whether they're, he might put it off till after the election, but does he decide, well, enough progress is made that we can postpone the tariffs? But there's no question that the situation with Europe is something we have to be very concerned about. We're also seeing a situation with their interest rates. I mean, with Madame Lagarde coming in as the head of the ECB, it looks like they're not going to be, this negative interest rate policy, which has been killing their banks, is not something that they're as high on as they were under Draghi. And of course, part of the reason our interest rates here have stayed low is because of negative interest rates in Europe and other places around the world. If those go up, that means our interest rates will move up a little bit anyway, and it won't be because of a better economy. That's not necessarily a good combination.
So if we get a combination of the December 15th China tariffs and these new proposed tariffs on French goods, what happens to stocks?
They get clobbered. I mean, it's funny. December 15th was the time. Well, I mean, at least 10% from the highs, at least, I think. I mean, we won't open that way if it happens when overnight and suddenly the market's going to open down 10% or anything like that. But I believe that that's going to be something that that a lot of people are focused on. First of all, it's priced in that this will not happen, in my opinion, number one. Number two, a lot of the assumptions for next year in terms of earnings growth and economic growth are that we will get a phase one deal. If we don't get that, that leaves the uncertainty out there. That keeps capital spending down. And so a lot of these assumptions for next year will have to come down. So it won't be just a short-term situation. It'll be a longer-term situation. So I think, it was funny because December 15th was when last year was when the Fed Chair Powell came out and made his negative comments about interest rates and how they could continue to go up for quite some time. It would be very weird that it would happen on the same date this year as well.
Yeah, I mean, so if we get all those things, we could get that 10% market downturn. I mean, of course, last year, Matt, we know what happened, and that was ostensibly on a more hawkish Fed, although I'm not sure I'm sold entirely on that. I mean, the problem is, and correct me if I'm wrong, I'm not making a statement, I'm asking you an indirect question, which is I don't want price to perfection, or at least the market's had a good run. Valuations cannot support, I assume, any kind of big trade war with Europe. Is that really the issue?
Yes. I mean, we don't have valuations that we saw in the year 2000, but I don't think we'll ever see that again in our lifetime. But they are still very, very high. And they are, and they are not just here, but in other places in the world, even though Europe has been lagging badly, their valuations are kind of near where ours are, and they really need. They don't want further tariffs to hurt their economy further. So yeah, we don't have the situation where exactly what you said is exactly right. We're priced for perfection. We're priced for number one, the tariffs not coming on, and number two, the economy doing better next year. If the tariffs, especially if we get a double whammy from both countries, that's going to be very, very, very hard.
Well, I appreciate you saying that, Matt, because to be honest, I'm not even sure what I said. But so there's three scenarios out there. Number one is you just laid it out. We get both tariffs, the December 15th on China and Europe. Market, as you says, gets clobbered. Scenario two is we get the December 15th tariffs on China, but let's say we don't get Europe. Then what?
I think the December 15th tariffs on China is a big problem. It's still we have a significant sell-off. Again, we have a different situation with the Fed, so I don't think we get the deep 20%, basically almost bear market, but deep correction we got last year. But I think it will be, in that near that 10% movement. If we get both, it'll be more than 10%. There's so much of what we're basing on for next year. The assumptions for next year are based on not necessarily a resolution, but at least a phase one deal or something coming together. And definitely no further tariffs. I mean, people are hoping for a rollback of tariffs. I think part of that is being priced in. If we don't roll back tariffs and on top of that add tariffs, that's going to be a problem.
Okay, scenario 3 then would be Trump is bluffing. We don't get any new tariffs on China. Maybe they push it back a few months or some goodwill gesture, and we don't get tariffs on Europe. In other words, the situation we've got right now. Does the market keep going higher in that scenario?
You know, it certainly could. We have this melt. We could have a melt up, but as you say, the market is already priced for perfection. So you know, if we got a little bit of a dip, then it would bounce back. But I think back to this level, you'd really, you know, the scenario where we're talking about where people say it could melt up from here, really is based on people just chasing things because if you're way ahead of the market, you want to stay ahead of the market. If you're behind, you have to play catch up, and that's with the institutional investors. Other than that, I think we've already seen an unbelievably strong move here since October lows. It's up 8% in just 7 or 8 weeks. The market's overbought on a near-term basis. Valuations are stretched a little bit. I think the market will just kind of drift sideways, maybe a little bit higher if we if some of these threats again are just head fakes, and we could close somewhere at the end of the year where we are right now.
And okay, so I love it. You laid out the 3 scenarios, and we're kind of putting you on the spot. I know that it's early, and these comments are breaking. Dow futures down 77 points right now, Matt. Is there one safe place to hide? If you want to stay fully invested in the market, like most of our viewers probably do, but they are worried because they don't know what's going to happen with tariffs, do biotechs look like a fairly safe haven right now?
Well, I do. They are overbought. They got hit pretty harder than the rest of the market yesterday. So they are overbought on a near-term basis, so they could pull back a little bit. But we have a situation where I think it was fairly obvious with what happened with Senator Warren. She came out too hard on this healthcare for all situation and for healthcare in general. And we saw how she's fallen pretty significantly in the polls in the last few weeks, and you see how she's reacted to it. She's pulled back, saying, "Oh my gosh, this is not a winning issue." So I think that fear, that headwind that have been facing the group, is behind it, and it can move higher as we move into the election year and beyond.